All right, everyone, welcome back for another deep dive. This time we're going to be taking a look at last week in the markets.
Oh, yeah. Some interesting stuff happening.
Yeah, you've been keeping an eye on things all week. We're here to kind of bring it all together,
Absolutely.
make sense of it all. We saw the S&P 500 almost hit a record high last week.
Crazy.
Some really good performance from European stocks. We'll get into that. And we'll even talk about, retail sales took a little bit of a dip.
Interesting.
What does that mean?
Yeah.
Not all doom and gloom, though.
Right.
So let's just jump right in, I guess. That S&P 500, coming so close to that record high.
I know.
Just 4 points away. It's like,
so close.
is this a turning point, you think?
Well, it's really fascinating to watch because if it does break through that, we could see a whole wave of new investment. People get really excited.
Right.
Potentially even faster growth. So, yeah, it's an interesting time for sure.
So it's like a near miss, but it's actually a good sign.
Well, we have to see.
Okay.
But it's definitely a possibility.
All right. Well, we did have that inflation report come out last week.
Oh, yeah.
The Consumer Price Index. And that wasn't exactly great news, was it?
No, not really. Inflation is definitely stickier than we had hoped. That core inflation rate, which excludes food and energy prices,
right,
came in at 3.3%.
Okay, so for our listeners out there who aren't, following inflation every day, what is that core inflation really telling us?
Well, think of core inflation as kind of like the underlying price pressures. It takes out those things that jump around a lot.
Right, food and energy.
Exactly, and gives us a better picture of how steadily prices are increasing for, everything else. So the fact that it's still that high, 3.3%, that's making the Fed nervous.
Yeah, makes sense.
Because it means that their interest rate hikes so far haven't really worked as well as they wanted, and they might need to keep those rates
higher for longer.
Exactly. Yeah.
And that, of course, has a lot of,
ripple effects.
Ripple effects, exactly. And speaking of things kind of taking a dip, retail sales.
Oh, right. Yeah.
They were down pretty significantly in January, almost a full percentage point.
0.9%, I think. Yeah.
0.9% to be exact.
Yeah.
That's the biggest drop we've seen in a year. Are consumers getting spooked?
Well, it's definitely possible. With inflation and just general economic uncertainty, people might be thinking twice about making big purchases or even just buying as much stuff in general.
Yeah.
But, there's a silver lining.
Oh, really?
Yeah, this spending slowdown could actually help cool down inflation in the long run. Think about it. If demand decreases, businesses might not be able to raise prices as easily.
Right, less pricing power.
Exactly.
So it's like a little bit of a,
a little painful.
Painful.
Yeah.
Yeah, but maybe it's the medicine we need.
It could be.
Interesting. Okay. Well, let's, shift gears a little bit and talk about Europe.
Okay.
European stocks are having a phenomenal year.
I know, isn't it something? Up over 12%. Compared to the S&P 500, which is up about 4%.
Yeah, huge difference.
What's going on over there?
Well, a few things are at play.
Okay.
The weaker euro is making their exports more attractive.
Ah, that makes sense.
Right, and there are some signs that Europe's economy might be a little more resilient than people initially thought.
Interesting.
So, yeah, it's definitely a region to keep an eye on.
So we're not saying it's a, complete power shift.
Not necessarily.
It's definitely something to watch.
For sure.
Okay, well, and while we're talking about, performance, can't forget about corporate earnings.
Right.
They've been exceeding expectations. Fourth quarter net income is projected to rise almost 17%.
Yeah, 16.9%, much higher than initially forecast.
Which sectors are really driving that?
Well, we're seeing a good mix, actually. It's not just one or two sectors, which suggests a pretty broad strength in corporate performance.
Okay.
But, we always have to look beyond the headlines.
What do you mean?
Well, are these earnings sustainable?
What are the profit margins like?
Right. Yeah.
Is revenue growing organically, or is it just a bunch of one-off factors?
Oh, I see.
These are the questions that smart investors should be asking.
Yeah, digging deeper, very important.
Absolutely.
Well, quick side note here. Markets were closed on Monday.
Right, President's Day.
For President's Day, of course.
Yeah.
It got me thinking about how holidays impact market activity.
Oh, yeah, it's an interesting point.
What do you think?
Well, holidays often mean lower trading volume.
Okay.
And that can lead to some interesting trends.
Like what?
Well, there's the pre-holiday effect, where stock prices tend to rise in the days leading up to a holiday.
Uh-huh.
And then there's the post-holiday effect, where we sometimes see a surge in activity as traders come back from the break.
Interesting.
So yeah, it's something to keep in mind.
So all this in mind, what are your predictions for the coming weeks?
Oh boy. You know,
What are you watching?
will inflation finally start to cool down?
Yeah.
Will we see consumer spending rebound, or will it continue to slow?
And what will the Fed do with interest rates?
Yeah,
Lots of questions.
lots of questions indeed.
Yeah.
Well, thanks for diving into all of this with us.
Of course.
And for our listeners out there, keep those questions coming and keep exploring the markets. We'll be back soon with another deep dive.